Welcome back to the big budget brainstorm. What we are discussing is what markets want to keep hydrated. The excellent pre-budget rally that has kicked off just a few hours ago. I have with me Navneet Munot of SBI, Aditya Narayan, Prabhat Awasthi of Nomura and Sudhir Kapadia of EY. Well, we were speaking about taxes before the break. So Navneet, corporate taxes. See, all the exemptions have not been grandfathered. So if taxes did not drop from 30% to 28 or 29 in this budget, will it be such a big negative for markets?
I think given the global environment, it could be, because as I mentioned that what the Trump is likely to do, I think it will be followed by a lot of other countries who are focusing on getting the investments in their home country and the whole move towards investing in their own country. So I think India will also have to follow that path. Another thing that I think that the FM had already given a glide path towards 25% 2 years back. It will be good that if we start moving in that direction, while at the same time a lot of exemptions have to be removed. So effective rate doesn't go down, but the peak rate, which is at 30, I think, and plus then you have all the surcharge and the cess and all, I think over a period of time we start bringing it down and focus a lot more on the compliance, focus a lot more on the collection. On the personal front, I have some idea. Maybe if you have time we can discuss.
Sure. On the personal front, Aditya, do you think because demonetization was seen as painful for some segments?
Yes, I think so. I mean, as I said earlier, I think the entire reform effort needs some political massaging, and this is an ideal opportunity to effectively do that.
Okay. Well, personally, I would think that, as we said, we are not a country which pays estate duty, inheritance tax, and only 1% being direct taxes. What exactly are you looking at? Is it the minimum that they may raise, or is it that they raise the top bracket from 10 lakh to 12 lakh?
No, I think the minimum they most definitely will do and do need to do. I think at the higher levels they just shift the slabs up a little bit.
Okay. Prabhat, what's your expectation? Is this what Aditya is speaking about, which is now becoming almost a market narrative?
So I think the basic problem with this narrative, in my view, is that once we keep craving that we don't have enough people who pay taxes. So when you increase this limit, you are actually reducing the number of taxpayers. So how are you going to get compliance if you keep the tax rate high? Essentially, if you're sort of arguing that people don't pay taxes and you increase the slab, then you're saying less people pay taxes. And you essentially are in the same soup. So actually the compliance goes up because either your tax rate is reasonable, that people consider reasonable given the services they're given, or your implementation of tax regime is so onerous, like in US, for example, you would go to jail, that people don't evade their taxes. Because at the end of the day, taxes are not evaded at the lower level, it's evaded more at the higher level, right? So essentially that is where the professionals or the people who are in their own businesses, these are not poor people.
We have put a stop to it, or at least lessened it by the audit trail?
So the point is that essentially this narrative is coming because the demonetization, the pain is what people are saying should be assuaged by the, but again, I would say this, that the salaried people haven't faced that pain.
Absolutely.
You look at the car sales or people who are buying on credit cards, these are guys who are salaried, they are not the people who are paying, it's basically the people who are not, probably not even the people who are, in the tax rate in the first, they won't be in the tax. And so I think really speaking, we really want to assuage the pain of demonetization. It will largely happen through some sort of measure which either raises the growth rate or raises employment or sort of pushes income in the economy rather than just. So my take.
So your narrative is no personal tax changes, but
if they have to happen, they should bring down the overall tax rate to margin level. Then you incentivize more people to pay taxes. At least you get more people to say, okay, my tax rates are not reasonable. So if I'm paying 25% now, I should go pay my taxes. That's the only way you can increase tax base, not by.
Fair point. Okay, you're not expecting too much. But Sudhir, actually, I also wanted to ask you, what is the most likely alteration or tweaking you expect on the corporate front?
So I think two quick points, Lata. I think I agree that if you increase the threshold limit significantly, it's counterintuitive to your objective of increasing the tax base. Instead, why not, for example, think of a 5% tax rate at the lower levels of income, which takes care of the massaging point, but it also serves to incentivize a particular category of taxpayers, particularly self-employed.
Do you expect it?
I think so. I think it can be a more realistic expectation than For example, our own survey at EY, the response was that a majority thought the exemption limit should go up to 5 lakhs, which I think is far more challenging for the government, but a 5% rate is far more realistic at lower levels of income, as an example. So I think that's one point. The other point is about, the corporate, which you rightly mentioned. I personally feel this is the budget when you will actually find a statement articulating the rate of corporate tax for this year as well as the next year. Okay. And mind you, this is what every country has done. When they've announced a roadmap for corporate tax, we did not announce the rates till now. This is the budget. If it doesn't do it in this budget, I think, the next budget will be even less. So I think we will see a clear roadmap to say this is the rate not only for next year, but the year after and possibly the last one in 19.
We may still spend FY18 with 30%, but we will be given an assurance that FY19 is 28?
No, I think 30 will reduce in FY18 for sure. So I would be very surprised if it is not, let's say, 29 now, because if you have to achieve 25 in 19,
you have to start.
And then you are, of course, so what you are doing is three things. You are reducing your exemptions. You are therefore increasing your corporate tax base, making the rate moderate. Even on the personal front, you have brought more people into the tax net due to demonetization. We expect an increase in tax GDP ratio. Our analysis expects an increase in tax GDP ratio of at least 0.75% because of the entire outcome of the demonetization.
Okay. Well, I just want to know if it's a deal breaker. If the corporate tax timetable, as he says, doesn't come, is it a deal breaker for markets?
I think the expectations are that something will be done this year.
Okay. Well, speaking of taxes and tax to GDP ratio, before I come to exactly what kind of tax growth you can expect, which Sudhir alluded to, how important is the fiscal deficit? Ultimately, we all measure the reform credentials or the discipline credentials by the fiscal deficit number. 3.5 in the current year. How much should it be next year to tick that box, Aditya?
No, I would say the direction is very critical. If you don't go down, then it'll be a little bit of a challenge. The actual hard number, I would say, is going to be less important. In part, because it's very difficult to take a call on numbers this year between demonetization, between GST, that's effectively coming. And in part because I think there will tend to be some kind of an expansionary bias that is going to be there with this government, simply because, a lot of the things that have not come through in terms of growth and job creation and things like that, that needs to be addressed a little bit. So I suspect, if you stay at 3.5, it's going to be massively disappointing. If you come to 3.2, 3.3, it's good enough. It will not unsettle the markets. And getting to a 3 number, which I would suspect will need to be pushed, is not something that everyone will necessarily buy. Okay.
I have a feeling Nomura is going with 3%. Sorry, no. Nomura is going with?
I think we think that the deficit will not be cut by what was agreed upon. So actually 3% rate was for fiscal 18. That was the target anyways. It was not for, the point is that we think I would agree that they should not go down to the rate that they had so earlier envisaged, because I don't think there is any expectation from the government, first of all. And secondly, also remember
that they should not go to 3. That's your basic minimum. What if they stood at 3.5? That also is a danger, is what Aditya was saying.
Yeah, so I think when you stand at that number, essentially your borrowing program will start impinging on your debt markets, right? So you have to keep in mind that you need to keep the interest costs in the economy low, and therefore some sort of signaling is definitely required that you are moving forward in the right direction. I think from that perspective, if you really look at liquidity in the domestic market, look at a current account deficit situation, frankly, a little bit of spooking really won't spook the markets, because there's enough chase that is going on for government bonds as it is as we stand today, given the amount of money which has flown in the banking system. So I don't think their small scale will really matter that much.
Well, FIIs can leg it out pretty quickly, and they did that last year. But Navneet, you began with fiscal deficit as one of your major points that you would watch out for. What would you watch out?
So I think it will be less than 3.3, not only because they are fiscally responsible, if last 2.5 years is anything to go by, but also the numbers are manageable. When you put the numbers, I think below 3.3 is possible this year. Above that, what happens that if you also include all the state government borrowings put together, it crosses 6%,
Yes.
and that you put along with the financial savings in the country, it starts crowding out the private investments. And I think for that reason, I'm very confident it's going to be less than 3.3.
Okay, that's extremely well put. I can just add those numbers. We have 6.4% fiscal deficit if you count the states, and 68% debt to GDP, which in comparable countries with our rating is an outlier.
The one number you have to remember, this year will be paying more than 5 lakh crore rupees in interest alone, like almost same as
Yes.
the fiscal deficit. If we keep on borrowing like that, I think at some point in time we will have trouble.
Fair point. So the markets would like that reform initiative to show, and therefore a 3.2 or a 3% will be a killer of a budget, a very positive budget is what our experts tell us. We have to take a very quick break, but what is the tax rate or rate of growth of the tax kitty that will have to be assumed? Can they assume 20%? Mr. Sudhir Kapadia thinks that more people have come into the tax net. That question to our experts in a minute. As well, what sectors will they bet on?